Hello, um, welcome to this new video of technical analysis. Um, so we'll be going through how to identify a trend. Um, so this is our risk disclaimer. You can pause the video and go through it anytime. So yeah, let's start. So what is a trend? A trend is simply a direction in which a particular instrument is moving. It can either move up, which is a bullish move, or bullish trend, or it can move down, which is a bearish trend. So we say the market can either be going up or it can either be going down. Those are the two trends that we have. Or it can be moving without any trend, which is called a consolidation phase. It can be ranging in between two prices. So yeah, let's look at the chart. So the market can be either going down, which is a downtrend, or it can either be going up, which is an uptrend. Okay, it's more, this is an uptrend. It's going up. At any point when you open the charts, I'm sure you can get a trend. This is an uptrend. This is an uptrend. It's going up, sloping up. You have a trend line sloping up. This was also another uptrend because the market is trending up. It's going up. As you can see, it's going up here. But then you also have consolidation phases where the market is without a trend, where you have something like this. Just change the color of this. So you also have something like this. This is not a trend. You cannot say it's going up. You cannot say it's going down. It's just playing around these two prices here. Then this is a trend. A trend is made of two waves, two legs. You have, let's say, this is a downtrend. You will have a leg like this. At the beginning of your trend, you have something like this. There's a leg going down. At the top, you have your swing high, the highest price. So this leg going down is your impulse. These are impulse moves. It's your first impulse, the moves that are going in the direction of the trend. So this is your impulse move. I'm just going to label it impulse 1. Just change the color also. So this is impulse 1 in the direction of the new trend. Then from this swing high, you'll get your first low, which is your can say this is your initial low. It's the lowest price. is blue. Okay, this is your initial low. Then you have a move, you get a leg that will go in the opposite direction of the trend. These are corrective moves, impulses. I mean, these are corrections. So this is a correction. This is your first correction. This one. Then you get a second impulse in the direction of the trend. It's your impulse 2. So you can get another correction after this one. This is your second impulse. So if you have something like this, you can say you have a downtrend, because you have, this is your impulse, this is your correction, this is your second impulse. But what are the important things to take note of here? Okay, so we say a trend is simply a direction in which a particular instrument is moving. It can either be going up or it can be going down. An instrument can also be without a trend, which is your consolidation phase. A trend is made of impulses and corrections. So these are moves in the direction of the trend, and these are moves in the opposite direction. Okay. In nature, impulses are big moves in the direction of the new trend. So those will be big moves. You will see strong candles when you get your impulses in the direction of the trend. You're going to have strong moves. So the important thing here is, if this is your highest price, if this is your highest price, your swing high. If this is your first or the highest price of the trend, this one, this corrective move is not supposed to go above that. It can pull back, it can go up, it can go up to this price, it can go up to this price, it can go up to that, it can go up to this price, but it mustn't go above this one, your swing high. Because now if it does like this, then it means it's no longer a downtrend, because this high is above that one. Downtrend is in nature, you have a swing high, then the next high is supposed to be lower than the previous one. So this is going to be your lower high. This one, because it is lower than this one. Okay, then you get your second impulse in the direction of the trend, and that one is supposed to go below this one. Then you can say you have a trend. All right, then you can say you have a trend. Once you have a new lower low, once you have something like this, these are usually called peaks. Okay, this is your corrective move, impulse, corrective move, impulse. So now you have a trend, because you have this high, this low, this high, this low. So a downtrend is a series of lower lows and lower highs. If you get another pullback, another corrective move, it is not supposed to go above the previous high, which is this one. Okay, it's not supposed to go above that high. can pull back to this price, maybe it creates like a false breakout somewhere here, but it mustn't go above your previous high. If it does like this, then it's going to be a different story. Okay, then just it can go up to there, but let's say it pulls back up to that price, and then this is your next lower high. This is a downtrend. It must also create a low that is going to be lower than this one. Okay, once you get another impulse in this direction, so this is an impulse, this is an impulse, this is another impulse. These are corrective moves. This is a correction, this is a correction. This is an impulse. So most trend following strategies will trade after this corrective move. They will either trade somewhere around here or somewhere around here, but after the correction, okay? You do not trade. If you trade in the direction of the trend, obviously you will not be trading these corrections, okay? You trade these ones, but we're not talking about which direction to trade in this video. We're just defining the trend. So this is a downtrend because you have lower lows and lower highs. So we say impulse, these ones, the impulses will have big candles. And let's say this is, let me look for a downtrend. So this is a downtrend. This is a downtrend. You can see this is your swing high here at the top. This is your swing high. And then you have this strong candle going down. This is an impulse. This is a correction. As you can see, this one is not going above the previous high. But after this correction, you get another strong move going down in the direction of this trend. As you can see how strong these candles are. You don't have any wick on this one. The wicks are too small. So these are strong candles in the direction of the trend. Then you get your corrective moves are weak. Look at these candles. Compare these candles to this one. This one carries huge momentum on it, strong momentum on these candles, strong momentum on the bearish candles. Weak momentum, strong momentum, weak momentum, strong momentum, because the trend is going down. So this was a downtrend. As you can see, it's creating this. This is a high. The next high is lower than that one. The next high is lower than the previous one. Next high is lower than the previous one. This one is lower than that one. So downtrend is a series of lower lows and lower highs. From here, you get a new low. It's broken. This is a low. The next one is lower than the previous one. This one is lower than that one. This one is lower than that one. This one is lower than that one. So this is a downtrend. And then it's broken thereby with the candle here. Then it started going up. Okay, so that would be a downtrend. Then you get an uptrend, which is obviously the opposite. This is an impulse move going up. Impulse move going up. Corrective move. Then another impulse going up. A corrective move. Another one going up. So these are impulses. As you can see, it's going up. You're looking at your lows. Okay, this is your swing. This is going to be your swing low. That's your first high. This is a low. This is a high. This is a low. This is a high. Your lows are going up. The highs are going up. You have higher highs and higher lows. This is an uptrend. Okay, it's just an inverse of a downtrend. If you have something like this, you don't have this. Oh my. The hell. So you have this. If you have something like this is not a valid trend line. It's not a valid trend. It's not a trend because it doesn't take out the previous high. So it's supposed to go above that high. If it breaks above this, then you can say you have a trend because you have this impulse correction, that impulse. Okay, so if it's still doing like this, it can still go either way. This is a lower high. You can still get another move, strong move going down, breaking below this, which you thought was a trend line. Then at the end, you're gonna have a downtrend. Okay, so just be careful with that. Make sure that if you connect a trend line, if you decide to connect a trend line, you have taken out your previous high. Okay, then this is a trend. So if you have something like this, so this is a valid trend going down, swing high, initial low, lower high, lower low. This you can take it because it has taken out the previous low. This is a downtrend, high, low. There's a downtrend. You can connect the trend line going down. It's a valid trend. However, okay, this one is also a valid trend. We only have two highs, two lows. It's a trend because you have taken out your previous low with this low. So this is a trend. However, this is not a trend. Okay, you cannot connect a trend line here. This is a high, a low, potential high. It's not a high because it hasn't taken out this. Obviously, it can still go up. It can still go up to that price and then drop. Okay, if it does like this, then what are you gonna say? Your trend line is here. So your trend line is going like that. It's still bullish. I mean, still bearish. This is a impulse. This is a correction, and then this is another impulse. It's a lower high because it didn't go above this high. It's a trend. So it's important that if you draw a trend line, ensure that you have taken out this low, then that will be a trend. And obviously, you will have different trends on different time frames. Different time frames will have different trends, and what might look like a trend on one time frame or might actually be a correction on another time frame. Let's take this one for instance. This is gold. Starting a new trend going up. This is a low. That's a high. This is a low. This is a high. Uptrend. Okay. On this time frame, it's going up. This is impulse, as you can see, strong candles going up. These are corrective candles. As you can see, they have weak momentum. You cannot say this was a trend. Then you have this strong candle going up on a monthly. It hasn't closed, but it's okay. Yeah, it's just closing because tomorrow is the first. Yeah, so it's a strong candle going up, went above previous highs. So it's a strong candle going up. This is an uptrend. But if you go to a smaller time frame, smaller than this one, maybe if you go to daily, you have something different. You had some sort of a downtrend, says strong candles down, sort of correction, strong candles down, correction, strong candles down, correction, and then started going up, you would be tricked and think this is a downtrend, whereas it's just a correction of a big time frame. It's just a correction. So each time frame has its own trend. It's each, say this is 4 hours. This is gold on 4 hours. It's in an uptrend, but if we can go maybe to 15 minutes, we'd probably get something different. We have a downtrend. Okay, sort of downtrend. Still consolidating for now. 30 minutes also, I think there's a downtrend also on this one. This is a high, a low, a high, a low, lower lows, lower highs. It's a downtrend. But on bigger time frames, it's an uptrend. This is just a correction. Okay. So we're about to close. I want to show you something that is going to help you in drawing your trend lines. This is an impulse. You have two types of corrections. This is an impulse. You can get a correction that is going to go against the trend. This is a corrective move. This is an impulse. Or you can get this impulse and the correction that is going to go sideways like this one, and then impulse. Okay, so if you have something like this, it's fine. You can connect a trend line because you have a high, a low, a high, a low. This is a trend. But now with this one, this is not a trend. You cannot connect a trend line. You cannot have a trend line like this. Okay, it didn't pull back. It must pull back and then continue going down. Then you have a trend line. But if it does like this, you cannot connect a trend line. Similarly, if it's going up, if you have something like this, this is a correction, a pullback, then a continuation. All right, you can trade these ones, or you can connect a trend line going up. But if you have this, this is also a correction, but it's not pulling back, but it is a correction. But you cannot connect a trend line like this. You need a pullback, then a continuation. All right. Let me just look for examples and then close the session. You can connect a trend line here. This is a pullback, this is a high, this is a low, this is a high, this is a low, this time frame. If you go to, say, this time frame, you cannot connect a trend line like this because you don't have any pullback. It's just this sideways corrections. It's not a pullback. It's not like this one. It's not like this. See, this is a high, a low, a high, a low. This is a trend. Same here, this is a low, a high, a low, a high, a low, a high. This is a trend. Okay, but you cannot have a trend line going like this because there is no pullback here. So yeah, that is how you can identify trend and easily draw your trend lines on any time frame. Prices fractal, so you use any time frame to identify your trend. This is a trend. Okay, inside a trend you have trends inside a trend. Inside this trend you have this. This is also a trend because this is a low, this is that's a high, a low, a high, a low, a high, a low, a high, low. This is a trend inside a trend. small trends on big time frames can be actually big trends on smaller time frames. Let's say this is our long-term trend line. This is a high, a low, a high, a low. It's bearish on this time frame. This is a mini trend inside that downtrend. This is a low, it's a high, this is a low, this is a high. If you can go to a smaller time frame and try to view that correction, see it's a trend on this time frame. It's a trend on this time frame. A trend with, this is an uptrend, as you can see, strong moves up, correction, strong move up, correction, strong move up, correction, strong move up, another correction. This is a strong move up, this is a correction. I'm gonna take one of the smallest corrections. Let's say let me take this correction, this one, and make it right. Right. I'm gonna open this in 15 minutes. Where I drew the red line. It's far back. It was in April. There it is. As you can see on this time frame, it's not a small correction. It's actually a strong. This is, as you can see, this is a high, a low, a high. Okay, so I was testing this resistance here, then it's dropped, and then you have this strong bullish move. Okay, so but if you go to H4, it's just a small pullback, but if you go to 15 minutes, if you go to a smaller time frame like 15 minutes and 1 minute, I'm sure this can be a long trend. Okay, so yeah, that's all I had for this session or for this video. Yeah, thank you for watching.